Mortgage rates give a little back. After a big drop a week ago, mortgage rates have given a little bit of that improvement back, but they're still in the mid 7% rather than over 8%. Following that drop, mortgage applications have increased. What does this mean for the Connecticut real estate market? At the end of the video, I'm also going to give you a quick update on what's going on at the fire damaged house. We're a little over a week into the renovations, show you what's going on. First, some key Connecticut market stats. Active on the market, just over 4,600. We had 4,592 last week. We're up 21 overall. We had 291 new listings over the last 24 hours. That's pretty consistent with what we normally see, around 300 new listings on Friday. We had just over 3,200 closings in October, and that puts us at about 1.4 months of inventory. Some key dates here. CPI and PPI reports are coming out at the early next week. It'll be interesting to see if we see the same weakness in those inflation reports that we saw in the jobs reports last week. Mortgage applications picked up 2.5% for the week ending November 3rd. This is a reverse of the recent downward trend in mortgage applications. Mortgage rates dropped during the same time, so it does make sense. More mortgage applications implies more buyers in the market and increased demand. Inventory in Connecticut has been creeping up slowly. We have just over 4,600 homes active on the market right now. To be clear, inventory is still low. Over the last month, we've only seen a net increase of less than 100 homes, so it's almost nothing. So inventory is still low, demand is still stronger, and there's potential for it to get even stronger. It's an interesting dynamic that we're still watching here. Connecticut real estate market is seasonal. There are more sales in the summer, fewer in the winter. As we head into the winter season, I do expect things to continue to slow down. The way we could buck that trend is if mortgage rates continue to drop and buyers who were sidelined by those higher mortgage rates come back into the market. I think mortgage rates are likely to stay in the mid 7% range. I could be wrong about that. It's what I think. What do you think is going to happen over the next month until the end of the year? Are we going to see interest rates go up, go down, stay the same? Comment down below. Let me know. The primary mortgage market survey, rates have had a good run. Last couple of weeks, they're down. Last Friday, rates dropped significantly. So much so that I called my active clients and let them know, hey, refresh your pre-approval, contact your lender. You may see a little bit of an improvement in your buying capability there. Rates have come back up a little bit since then. That's normal after such a large drop. And it seems like that catalyst was the weak jobs report that we had last week, on top of the fact that the previous 2 months of jobs reports were revised down significantly. Maybe the economy is weakening. The Fed, they're keeping all options on the table for the December meeting. Investors and economists, they're leaning toward no rate increase, keeping things the same. The thought there is it does take time for higher interest rates to work their way into the economy and have an impact. A couple of examples. If you're a home buyer, you have the opportunity to lock your mortgage rate 30 to 45 days before closing. If you do that, and then mortgage rates jump up, say 3 weeks before the closing, it's not going to have any impact on you because you've locked your rate. What it is going to have, or who it is going to have an impact on, is buyers who haven't gotten under contract yet but are planning on buying in the future. So it takes time to have that impact. That's a shorter term and pretty simple example. A little bit longer term example might be a business. They got to take out a 12-month loan. And they know that at the end of that 12 months, they're going to have to refinance it. So maybe 2 months into that first 12-month term, interest rates go through the roof. Well, they're not affected for the next 10 months because they have a locked-in interest rate. When they have to refinance, though, that's when they're going to feel those elevated interest rates. So it takes 10 months in that particular example. So this is what we're dealing with, bigger picture in many different scopes and many different scales. As interest rates go up, it takes some time to impact the economy. Bottom line, the Fed, they're going to do what they're going to do. You have to take action to put yourself in the best position to protect your interests. If that includes any kind of actions with real estate, buying, selling, leasing, whatever, give me a call. We'll work it out. We're just over a week into the renovations at that fire damaged house that we closed on. I just wanted to give you some videos and pictures, give you an idea of what's going on. Got the new siding on the house here. Gonna go inside. Pile of hardwood. We had to rip up some floors. Like I told you about this, that window right in front of me was leaking. The whole subfloor was rotted out. If you'd stepped on it, you'd gone right through it. Got a new back door there. Started taking out the counters. Top cabinets are out. All the appliances are gone. That's where the refrigerator was. It was in this stairwell down to the basement. Lion's share of the fire damage is right here. Ripped out all the plywood. All those beams are coming out and going to be replaced. Bathroom, gutted. Started taking the paneling down so that we can paint the walls. There's sheetrock behind it, so it's nice. Garage is cleaned out, just got some siding in there. And this is the basement, all cleaned out. This is where the fire was. You can see the blackened wall and wires, and certainly the beams here that are burnt and charred. And new electrical system and new boiler as well that needs to be replaced. That's all I got for today. Hopefully you got some value out of that. If you have any questions, comments, throw them down below. Please like, subscribe, and until next week, have a great day.